Let me now bring on board Arvind Sangar, Managing Partner with Geosphere Capital Management, who joins us live from New York. Arvind, fantastic to have you back on ET now. Thank you for joining us. Arvind, the big surprise from US Fed, which came last night, was that they have acknowledged that US economy has recovered, but they also have indicated that tapering could be coming soon.
I don't know if that was a surprise. I think when the tapering was pushed back at the September meeting, the clear indication was that they were watching the data, and some of the data that had been soft recently had stayed their hand, but they had clearly indicated that tapering was, a matter of when, not if, and it was data dependent, and I think they confirmed that. I think if there was one disappointment in my mind, it was that the Fed did not allude to the government shutdown and the fiscal discussions on extending the debt ceiling. And there was some hope that they would reference that. And since there's another issue coming up in January, February, some of the hope has been that any tapering is pushed back till March because the Fed might want to stay its hand while waiting for the uncertainty in Washington to evolve. The Fed statement did not allude anything to what's going on in Washington from the standpoint of the whole discussion about the debt ceiling and government shutdown. They just alluded to the fact that fiscal tightening is taking place, which is, I guess, partly being caused by prior negotiations on budget deficit reducing automatic measures. So I think that, net, I think if there was one piece of slightly negative news, it was that maybe that makes tapering more likely in December, whereas the consensus had seemed to move towards March. But I still think the jury is out. It's too difficult to say whether tapering will start in December or in March, based on both whether the Fed cares about, the Washington debate and based on what the economic data does. And the economic data over the last few weeks, although there was a gap for a couple of weeks, but the economic data continues to be suggesting a softening, still growing, but somewhat softer growth in the U.S. economy.
Arvind, hi, morning. Let's talk about India, considering that's the market which is looking more exciting right now. We're pretty close to lifetime highs on both the Sensex as well as the Nifty. What's the market pricing in?
Well, it's interesting because, if you look at other emerging markets that have lagged and India has done better, I think the one difference when you look at, major markets amongst the BRICS countries or others is that India has an election where there's a possibility of an exciting change, at least for the markets exciting, a change in government, which you don't have to look forward to in many other emerging markets. And there is the hope and the expectation that a change in government could mean, election giving new mandate to some government could mean some positive movement internally generated that would be positive for growth. And therefore, the market is looking through the near-term weakness and looking beyond that. And I think the recent poll data that has been coming out has supported some of the growing optimism in the market that this election might bring out, frankly, a Modi-led government, which the market, at least for now, is willing to buy into as being a positive for the market.
So if we do get a Modi-led government, do you think the market would be on a tear and we would see much higher levels from what we are at right now?
Well, I think that is a tricky one because I really think the market short-term might, barring any global factors, on a local factors alone, the market might peak after the state elections if the BJP does do well as some of the recent polls are suggesting, where it wins 3 or 4 states, then that could be, I think, probably the near-term peak on the market, because at that point we'll be left with still an existing government which is going to be pre-election. Any government, not just this government, will be hard put to put any meaningful decisions on the table. And at the same time, you could have a Fed tapering starting either in December or March, which are both before the Indian election, before a new government is in place. So all of that, I think, creates more near-term risks. And so some of the good news that, frankly, RBI has been helpful. The RBI policy, not the policy, but the statement by the RBI governor or the details that came out after the rate moves by the RBI a couple of days ago were also somewhat more supportive of growth. So I think, there's a couple of things that are in the short term providing optimism, but I still think we're a long ways from where a new government is in place and we get clarity. So the markets, I think, can go higher short term, but I'm not sure that, they can keep running between now and May without worrying about some of the more near-term risks that are still out there, including weak growth, weak earnings, and potentially inflation not completely rolling over as some people are hoping it might with the good monsoon that we've had.
Right. Arvind, the last time when we interacted with you, which was early in September, you were not an India bull, you were neutral on India. But now things have improved. Earnings have been above estimates. Macros are looking better. The CAD risk is behind us. Are you of the view that the storm for Indian economy has come and gone and it's time to be a buyer on every dip when it comes to Indian equities?
It feels like it. Clearly, I think the sentiment has turned, and I think the political situation seems to be getting clearer in the last month and a half. I think the momentum seems to be clearly shifting towards maybe a more decisive outcome than what could have been the feared for kind of a hung parliament with a third front. So I think the political tea leaves seem to be getting clearer in favor of a change. And you touch on a very important point, which is that the earnings season has been less disappointing and maybe even has had some positive surprises that has been a positive backdrop. And then I think if the RBI is starting to turn more supportive, that is the other leg of the stool that we've needed more clarity on. And I think that if all those three factors are working well, and the macro factors on a global basis are proving to be relatively benign, and U.S. markets, European markets have all been on a tear. It's just been the emerging markets that have been laggards. And investors are looking, to go further out on the risk curve when you're seeing multiples for U.S. S&P 500 companies already trading, higher than historical average. Emerging markets have somewhat depressed earnings, and Indian multiples are not depressed, but others are more depressed. But Indian multiples are not excessive. Then it starts to become interesting to move money towards emerging markets. And there, as I mentioned earlier, India has some of the better catalysts over the next 6 to 12 months than many other emerging markets. So that makes India.
Give me a flavor of your current portfolio strategy. What are your tactical trades, and structurally, how are you positioned in your India portfolio?
Well, structurally, unfortunately, I'm not long enough. I wish I were longer. But tactically, in terms of the sectors or the stocks that we like companies, in the telecom space. We're looking to add in the banking sector space, where some of the private banks, I think, could see, if the RBI is done with its rate increases, could see improving, valuations. And then I would say that, we have one or two favorites in the oil and gas space. So those are some of the areas that we like. We're still skeptical about, some companies in the power equipment space, where I don't think the turn in new orders is going to be quite as dramatic as people are expecting. But, in general, we think that maybe some of the domestic stories like the banks start to become more interesting here.
Guess from the oil and gas space, you still like Cairn because you've been a big fan of that company?
Yeah, I think people with an E&P exposure, where the government is now recognizing that acting as an impediment to exploration is, shooting the country in the foot. And therefore, companies like Cairn and Reliance, notwithstanding some of the headlines that come out, are, I think, well positioned in the current environment.